Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Cameron Yarbrough of Torch coming to us on a beautiful San Francisco day. How's your day going?
It's glorious so far. I rode to work on the ferry across the bay, and I'm excited to be here.
Where are you, in Mill Valley or Sausalito, or where do you live?
I live up in Marin County with my wife and kids, and I commute daily by the ferry to the financial district downtown San Francisco.
That's awesome. Good for you. My family, we live in the Presidio. We're trying to move to Marin. We keep getting outbid in every single. Yeah, it's insane.
Yes, I went through that myself.
It's not fun. It's really because it's hard not to get emotionally caught up in making an offer on a house, and then when you don't get it, it's like the letdown, and it's this repeated cycle, right? I guess it's kind of like fundraising, right?
Yes, that's life in the Bay Area, what you just described.
I'm looking at a house this afternoon, actually, in Mill Valley, and of course, I'm paranoid that all these new the new millionaires coming out of Slack and Pinterest and Uber and Lyft and everyone are going to make the housing market go crazy. So I don't know. We'll see.
We'll see. There are some big IPOs this year.
Yeah. Zoom, actually, which we're using, this is not a plug for Zoom, but we're using Zoom to record this, had a huge pop in their first day. That was wild. Okay. Well, let's focus on you. What is Torch? What do you guys do?
So Torch is a leadership development platform that is tech-enabled and driven by data, and we leverage human coaches to help senior leaders become more effective.
Okay. And so I guess this is for middle managers to sort of level up their game, or what's the use case or scenario?
We're really focused on middle to senior leaders in fast-growing teams. So the idea is that senior leaders have different needs from new managers. Mm-hmm. They're not better necessarily, just different. And so our whole tech platform and then the coaches we recruit to our marketplace are all optimized for the needs of a senior leader.
Okay. For a middle manager to become a senior leader, or for a senior leader to sort of even go further, or both?
Both. So think of a middle manager who's aspiring to make her way up into senior leadership, or a senior leader who's just wanting to continue to refine and step up his or her game. They would come to Torch in order to take our assessment, to use our learning goals platform, to work with one of our very senior coaches to help them level up.
Okay. What are some things, maybe let's take that transition from middle to senior, just because it's pretty intuitive. What are the things that person is leading? And actually, I had a interview yesterday with an app that was helping with public speaking. I mean, is it things like that, or is it more, what are some of the things they level up on?
So we don't know until they come in and take our assessment. So the first thing that they have to do is they come in and they have to match with a coach. One of the things that we're best at is the matching of the right coach fit. So most senior leaders are very, very picky for a good reason about the advisors and consultants that they work with, because that chemistry and the person's background are so important. We have an algorithm that effectively matches the person to the right coach, and we have one of the best match rates. We're in the high 90th percentile in terms of our match rating.
Okay, cool.
So then the next step, sorry to interrupt. So They would match with a coach, and then the next step is they take our assessment. Once they take our assessment, we then, the software tells them what their blind spots are. And once we know what their blind spots are, the coach can then help them through a development plan that also takes place on our app in order to level up in specific areas like conflict management, communication, how to be more influential, how to be more empathic. It depends on where that person's blind spots are as reflected by the assessment tool.
Yeah, interesting. Gotta almost be worried to take this assessment tool. I think it would tell me I'm just full of blind spots, like nothing but blind spots.
But that's part of when we're in most personal development, most growth kind of hurts a little bit, right? And that's the idea, is when you come to it and to take our assessment, you need to know that we are going to help you see some of your hidden strengths, but we're also going to show you where your blind spots are. So if it doesn't hurt a little bit, then we're probably not pushing you, and you're probably not stretching enough.
And who are these coaches? I maybe have a little bit of a skepticism about coaches because I just see people advertising on LinkedIn that they're gurus and coaches, and I'm always like, who are you people? So who are your coaches?
There are the guru coach types out there. They're sort of all over Silicon Valley. We do our best to try to weed those folks out. And so most of our coaches have operator backgrounds and very clear psychological backgrounds that they can point to. You'll find that a lot of the guru coaches, they aren't necessarily people that come from operator backgrounds. So I think it's really important to weed those folks out and really try to choose someone who has like put in their time working in organizations, actually being a leader themselves, who also has gone through a coaching program, has brought that together with their operator background to help a senior leader be more effective. So I'm very, very clear about this. Our coaches are people who have done it before.
Yeah, that sounds like the best fit. I'm going to guess these people are expensive. How's the pricing model work, or what's the business model?
So we're B2B only. Our pricing starts at $500 a month for a rack rate, and then it goes up from there depending on the seniority of the coach. Got it. We sell into organizations exclusively. We don't work with private individuals. There are a number of other solutions out there for people who want private coaching. But we're very focused on working with enterprise.
And so a company will acquire this or subscribe to this for, a whole swath of executives. Is that the model basically?
Yeah, a good way to think about who Torch is for the organization is we come in as a partner with the organization to help them develop their senior talent. So think of Torch less as a vendor and more as a talent partner. So we'll come in, we'll run an assessment, we'll help the HR department or a team leader decide who it is that they want to onboard to our program. And then we partner with them to help those people become more effective in their roles.
Makes sense. And what's your background? Were you a coach in a previous life, or a manager trying to level up, or both, or what?
So both, all of the above. So I actually was an entrepreneur for many, many years. I ran a number of businesses, had one small exit, and I still am on the board of my second company, which is called Well Clinic here in San Francisco. So I have a background in business myself. I've built a couple of successful mid-sized companies. I then took that experience and went into the field of psychology. I developed myself as a clinical psychologist. So really, my experience as an executive coach is a combination of both my business background and my clinical background.
Yeah, cool. And how long you guys been around? What's the story? Any metrics, like number of coaches or anything else you want to share?
We launched Torch back in September of 2017 and went through Y Combinator in winter 2018. And then we just raised our $10 million Series A from Norwest Ventures we just closed that round about a month ago. We have over 100 corporate customers already. We're coaching hundreds and hundreds of their employees, and we're scaling very quickly.
Awesome. Congrats. Let's talk about fundraising. So is it just the one round? Did you bootstrap it up to that Series A, or how did you fund it in the early days?
So the first round was our angel round. And so there was our angel round, our seed round, and our Series A. So we've raised 3 rounds at this point.
Let's just go in chronological order. So your angel round, what was, tell me about that. Who did you get into that? Was that family and friends or folks in the coaching industry or what?
So I specifically, for our angel round, I specifically didn't go to family and friends. And the reason for that is I wanted to really keep my business life separate from my personal life. I think that's just a very kind of a clean and healthy kind of distinction that I wanted to make for myself. It's not right for everybody, but that was a distinction for me. So I chose to leverage my professional network. And as I think many founders do when they're raising an angel round, they're really raising an angel round based on their own reputation. And my angel round very much was that. So over the years of my working as an executive coach, I've developed a pretty established network of professionals, many of them founders, many of them the executives throughout Silicon Valley. And so I went to all of those people in an attempt to raise money, and it worked. And when you're raising an angel round, you have really nothing to show except for your own professional reputation. You have a vision to present. You have an idea, an aspiration, a passion, but really what you have to point to is your own track record as a professional. And so that's really what I raised my angel round on. Is I went to all these people who had trusted me and I said, hey, I'm going to build this company. This is the mission. It's really important. I'm the right person to do it. My co-founder is the right co-founder. And will you give us $25,000 or $50,000 or $100,000? And we were effective at raising that money.
Very good. How many, I don't know, do you have any metrics of, how many angels you pitched versus how many came in, or just people like to know sort of what does it really take, right?
I think we raised $350,000 in that angel round, and that just gave us just barely enough money to kind of get through Y Combinator. My co-founder and I weren't really taking a salary then, and that money was just being used for operations. I think we raised from about a dozen angels at that point, and those angels were people from, some of them were founders of well-known tech companies. Justin Kahn was one of them, the co-founder of Twitch, Steve Huffman, and Alexis Ohanian, the founders of Reddit. Emmett Shear, the current CEO of Twitch. There were a number of people who were founders themselves that I went to during that round who said yes to us. And it was actually the strength of that early batch of angels. Actually, this is another reason why I think it's actually important to raise from professional angels as opposed to friends and family. Your ability to raise your seed round, they're going to look at who your angels were when you raised your very first round. So each round you raise, they're going to look at who funded your last round to help them make a decision on whether or not you're an investable company. So for me, it was really important that we raise money during that angel round from established and professional angels as opposed to friends and family.
Makes sense. And it almost seems like you could raise money, or you'd want to raise money from, like you're saying, some of these entrepreneurs who might have a growing startup and need your services, right? Kind of a 2-for-1 punch, right?
That's right.
Yeah. I've heard that type of story on this show several times, where it's a fundraising campaign and a sales campaign sort of in the same breath. Yeah.
That's absolutely true, and because a number of those angels became customers of ours, and as far as you're getting those first few customers is also very challenging, and your investors are going to be the most willing participants, be most invested, if you will, in taking a risk on you as a customer. So that's absolutely right. It's really important to think about who those early angels are. Again, friends and family, they couldn't be my customers. So to me, I was really focused on who's going to help me in terms of who's going to help me reputationally when it comes time to raise my seed round, and who's also going to be a great customer to provide that early base of revenue.
Yeah.
That's how I was thinking when I raised my angel round.
Very good. And then so next round was you got it to Y Combinator, and is that the seed round?
So that was the beginning of our seed round. So YC takes 7% roughly, and the investment was $120,000. I think it's now up to $150,000. I think they just raised it the batch after us. And then after demo day, which was 3.5 months later, we raised another 1.5 million in our seed round.
Okay. Talk about Y Combinator. What was the biggest, what are the biggest takeaways that you got from that maybe other people could leverage in their own fundraising?
I think that there are a lot of benefits from going through an accelerator, and Y Combinator in particular. The first is just the batch phenomenon. It's really important to be surrounded by other companies, other founders who are ambitious, who are working really hard and solving difficult problems, because there's a certain kind of momentum that comes from being surrounded by other fast-growing companies and ambitious people that will create up this sort of positive pressure that you really need early on. One is just the batch experience. Two, Y Combinator is very, very experienced when it comes of helping you decide what not to do. It's very tempting for early stage founders to try to do too many things. And I would argue that most startups fail because they try to do too many things rather than focus on a couple of things that they could do really well. YC is very good at helping founders in that very early stage focus. And then I think lastly, YC is really talented when it comes to helping you think about fundraising your next round and how to package your company, how to tell the right story, how to build the right deck, which types of investors you should be focused on, etc. So they're really helpful at helping you think about the right things and avoid the wrong things. That's what Y Combinator does for a founder.
Interesting. Probably, I think the answer is already known, but would you do it again for your next startup, or did you get what you could get from YC? I don't know.
I would absolutely do Y Combinator again. I would do it 3 more times. It was that good.
Cool. I applied to it years ago, when it first started Founder Street, and didn't get accepted. And I don't think I'd try it again, but little part of me wishes I had maybe tried a few more times.
Hey, we were really lucky. I feel very grateful that we got in. I think there were 8,000 applications in our round. They interviewed 500 companies, and they accepted 100 into our batch. And those are difficult numbers. But if you don't try, one way to guarantee that you're not going to get in is by not submitting an application.
Right. Any tips? Actually, let's touch on that. Any tips for getting the interview or getting in?
Yeah, I think Y Combinator is primarily focused on 3 things: the market, the product, and is this the team to build it?
Yeah.
You've got to nail those 3 things. Is there a market? Is the market, are you going to be differentiated in the market? Is there a chance for you to be a category leader in that market? Is it a market that's growing, or is it a market that's contracting? Second, what is your product, and Y Combinator is stacked with very, very intelligent and very experienced product professionals. So they have a deep understanding when it comes to software products, but also you'll see that there's a lot of, they're taking life sciences companies, they're taking hardware companies, et cetera. It's not just software anymore. So they have a whole full stack of people that are able to evaluate your product. And then lastly, are you the team to build it? Why you? Why is it that you and your co-founder, or you and your two co-founders, why is this the team to succeed with this product in this market? So you've got to really nail those three things.
All good advice. Do you think are they taking more later stage, or maybe the question is, do you need some pretty healthy traction before going in? Feels like a lot of these accelerators are sort of almost moving later stage in some ways. I don't know. Do you have any thoughts on that?
So you're saying, are they taking later stage founders at YC? Is that the question?
Do you need to have more traction to get into YC today than maybe 5 or 8 years ago? Or can you really early?
No, you can absolutely be really early. I think it's helpful if you have some customers that are using or buying your product, right? But there are still founders that are getting into YC that have no users at all, just because they have, it might be a new product in a new category in a market that looks interesting or exciting to the partnership, or it's a really, really compelling founder that's done something really important or has already solved some other really big problem.
Yeah. Okay, one more question about YC and we'll move on. But did you do any sort of back channeling or side door hustle, or did you just apply and hope they choose you for the interview? You know what I'm saying? Like sort of work your network to get that interview?
So what I did, and what I think everyone should do, is if you have relationships with other founders who have been through Y Combinator, you should talk to them and ask them to write you a review. So if you have friends or professional or colleagues who have been through YC, you definitely want to ask for referrals, because YC definitely looks to their founder network when making decisions about who to bring in.
Yeah. Okay. Very good. All right, let's go on, I guess, the next round. Oh, actually, one more. Did you raise, it seems like YC, when they have their demo day, most of the companies have already kind of gotten funded, or at least gotten a lot of their round funded. Is that a true phenomenon? Did you guys do that, or did you sort of raise after demo day?
We raised after demo day. And YC is mostly helping founders. Look, there's a lot of benefits to waiting to raise your round after demo day. And part of that is because you're going to get more likely to get a stronger valuation, because it's a more competitive process if you raise after demo day. We raised a little bit of money before demo day, but the vast majority of our round we raised after demo day.
But if you do that, aren't you missing all that frenzy that happens, at demo day? I guess, don't you lose some of that?
Well, I mean, when we say at demo day, there's a frenzy that happens on demo day, but the investing happens the days right after demo day, right? Okay. Demo day is actually a showcase a founder to talk about their company for 2 minutes on a grand stage. The investing actually happens subsequent to that on investor day, or in private conversations. That's when the investing actually happens.
Okay, let's move on to the Series A, which you guys closed fairly recently, I believe. Talk about raising that. When did you know it was time to go go out and do a Series A?
We knew it was time to go out and raise a Series A when we were really accelerating. So when it comes to raising a round, an investor is going to really look at they're going to look at your total revenues or your total user base, but primarily they're going to look at your last 3 to 4 months relative to your life history. So investors want to see that you're growing really fast in your last 3 to 4 months. That's when they want to grab you. So we had a strong history of revenues, but then we had linked together 4 or 5 months of really strong numbers, and that's when we knew it was time to go and raise.
No, that's actually super interesting. I think that's a good placeholder or criteria to use to choose that. Are you able to share anything regarding metrics when you sort of knew, hey, our metrics look good for a Series A?
So I think what I'll point to is just some broader note. I'm not going to talk about our specific revenues or valuation, but what I will talk about, I think, some really important benchmarks. So in the SaaS world, it's the land in which that we live in, an investor wants to see at least $1 million in annual recurring revenue. And then they want to see that in the last 3 to 4 months that revenue was increasing. So we had beat that target, which is sort of table stakes for a Series A these days, and we had been increasing the last 3 to 4 months, and that's why we believe that we would be able to raise our A.
I like that benchmark of the $1 million ARR. What do you think a monthly growth rate needs to be? Not necessarily what you guys were, but what sort of month-over-month growth, or what do you think?
You really should be growing at about 10% month over month, preferably 15% month over month, at least for about 3 to 5 consecutive months before you go into the market.
Very good. So how did you identify, I believe Norwest led the round?
Yes, Norwest led the round.
Yeah, how did you kind of pick which investors to target, and did you run a process? Did you have a large funnel, small funnel? Tell me how it came together.
I did have a large funnel. The way that I managed my fundraise is I casted a wide net at first in terms of what I call my coffee meetings. The coffee meetings are like a pre-screen, where it's an opportunity for me to screen the investor and for the investor to screen me without having to commit very much time. This is just an assessment of chemistry.
Yep.
And so I had probably 40 of those meetings. They're 45 minutes. Typically, we're meeting on neutral turf at a coffee shop, and that meeting is generally really casual. We're not even necessarily talking about numbers and metrics. It's more about assessing personal fit. So if that meeting went well and it seemed like, hey, there's chemistry here, we're aligned on the mission, I think that you could be an investor and a board member that could really help this company grow. Then we would take it to the next stage. Mm-hmm. So the next stage is usually what's called like a group. It's a group interview with 2 to 3 partners, in which they're really kind of doing a deeper dive into our metrics. And then if we advance past that stage, then we go to a general partner meeting, and that's usually the final pitch in which you're presenting a 45-minute slide deck and a deep dive into your company history for the investor. We also did something else that I think was really important. This was something that came out of the YC Series A program. YC now has a Series A program that's designed to help their seed stage companies raise their Series A's. We built an investor memo. So an investor memo is really for us, it was about a 15-page document detailing the history of our company, the market, the product, and the founders and the executive team at that point. And gives us to tell the story of our company in our own words. So we built that investor memo, and we would send that to the investor along with our pitch deck if the coffee meeting went well. So ahead of the group meeting, that's when we would send our investor memo and our pitch deck. It would be ahead of that group meeting. And that was really an important tool for us in order to get the message across that we wanted to communicate to the investors.
Yeah, really good. I like that a lot. I've seen that investor memo come up a little more often lately. It's kind of like seems to be becoming a trend a bit. Yeah. I think Rippling just had one that they put out that was got some viral buzz to it recently. Kind of interesting. I like this process a lot. Let me go back to the coffee meetings because I think that's interesting. What was your approach? Were you just identifying investors who play in the maybe work 2.0 space, and then you're just reaching out, hey, I'd love to meet for coffee and kind of just share what we're doing? Was it just a real casual outreach or what?
It is casual and it's not casual. So every single founder needs to figure out what type of investor is going to help propel their company into the next stage. So you need to identify investors who have domain experience, passion about the space, and a personal kind of fit and chemistry that says to the founder, this is someone that I want to work with. And the Series A is the most important fundraise in terms of the investor you choose, because this is the person that's going to be with you the longest throughout the longest life cycle is going to be your Series A investor. So you really gotta nail this one. This has to be someone that really understands the space that you're in, they're passionate about it, and that you believe you're going to get along with this person through thick and thin, because there's going to be a lot of thick and thin over the next 7 years of the company history. So these are the types of things that you need to be thinking about as a founder when you're going into that coffee meeting. So that's why I'm saying it's casual, but it's not casual. You have to evaluate that person based on, hey, this is going to be a 7-year marriage. Is this the person that I want to be working with very closely?
Did you have any standard questions you would ask, almost like your standard interview questions when kind of assessing that fit and chemistry and everything?
So yes. So mine was, I had a couple of important questions. It was about their person. I asked them about their personal values. I asked them what their experience was with leadership and executive coaching in particular. And I asked them to talk about their experience in the world of SaaS software.
Mm-hmm. Yeah.
So those were my kind of 3 big questions for my coffee meeting, because I was clear that I wanted to work with an investor who had a B2B SaaS background, who was passionate about the leadership space, who I would get along with.
Yeah, makes sense.
So that a founder needs to identify what his or her top 3 questions are for that meeting in order to run a similar analysis that I did.
Yeah. And the screening for or assessing for chemistry, is that just a gut feel kind of based on how they react? And, did you have a framework that you were putting 4 stars along these criteria? Or was it just kind of, hey, I could work with this guy or gal?
It was more of a, hey, I can work with this person. And from there, I would then, if that meeting went well, I would move. I made a CRM that I used, and I would advance them into my next stage of my pipeline, and then I would continue the engagement. But if it didn't feel like a fit in either direction, then I would not advance them, and I would close that deal.
Roughly how many do you think moved on to like the group meeting, 45 top of the funnel, then how's it sort of winnowed down from there?
So, we started with 30 plus coffee meetings. And then I think, we advanced into maybe a dozen of the group meetings, and then from there into about 5 general partner meetings, maybe 6. And that's pretty typical for a successful Series A.
Good. Very good. Well, very good. Lots of good, meaty nuggets in here. Anything you would do differently for your next fundraise, or if you're doing this all over again? Yeah.
I would say my advice to founders when raising a Series A is you need to start figuring out who those coffee meeting people are going to be earlier, and you should be trying to reach out to them to develop relationships with them before the coffee meeting. So don't wait until your coffee meetings to start cultivating those relationships. So that's a lot of Series A is still based on the investor investing on who the founder is and their ability to trust and predict how that founder is going to behave over time. So you want to start building that rapport earlier. And some of the most famous rounds in the last, couple of years, like for example, Mathilde Collin from Front, she talks about this in her blog on the First Round Capital, on the First Round Review. She really is adamant about developing those relationships ahead of time, so that once you go in to handing them over your investor memo, the round can all happen very, very quickly because you've already built that trust.
No, I love that. I think that makes a lot of sense. In terms of actually doing that, is it kind of that old advice, like where, ask for advice, you get funding, ask for funding, you get advice, where maybe sort of like a variation of that, where maybe you're reaching out to these investors you've already identified and you're just kind of giving them update on what you're doing and your vision without really pitching? Or how do you sort of develop those relationships in advance? Any thoughts?
You would ask for an intro from somebody who already knows them, and you would just try to have coffee with them or go for a walk with them, or even come to their office and just have a sit down. It can be very, very casual.
But do you make it explicit that right now I'm not raising money, I just am kind of wanting to get to know you? Mm-hmm.
I would say, I'm not raising money right now, but things are going well, and I'm trying to get a sense for who my Series A investor might be, and I'd love to just have a casual meeting with you if that's okay.
Awesome. Yeah, very good. All right. Well, this is super actionable and useful. Any other tips or any things we haven't covered, or have we pretty much covered it all?
Yeah, I think what we didn't cover is the psychological part of this. What I want to say about raising any round is it's very, very difficult, and you're going to be rejected a lot. Think about it this way: you're going to be rejected way more than you're going to receive way more no's. If you're running a good process, you're going to receive a ton of no's for every yes. Okay, so you have to have the composure and the ability to be rejected and to still get up the next day and put your best foot forward and give that same inspiring pitch again.
Yeah.
So understand that you are going to get a ton of rejections. It's going to hurt every time. That's normal. And you still have to get up the next day and do it again. So a founder's ability to manage their own psychology is the part of fundraising that people don't talk about as much, that is incredibly important.
Do you have any tips for that? I mean, I went through it myself. I almost was about to jump off a ledge at one point. Like, I don't know. I mean, do you have any tips, or take up yoga, meditation,
Yoga, meditation, therapy, all of it. I've done all of it, and I've used all of those tools in order to get through every fundraise. There's not one of them that has been easy. There's not one of them that felt good to endure. They all are painful, and then you hope for that positive outcome and that relief at the end, that you don't know, but you don't know when you're in the middle of it if that term sheet is coming. And so you have to be able to tolerate your insecurity, your fear of uncertainty, your your existential worry, all of that you have to be able to manage effectively in order to get up that next day and put your best foot forward.
It's interesting. I mean, obviously I'm running this show and I think you're our 97th interview, but I'm also thinking about possibly kicking off our own next round. And, I have that sort of like pit in the middle of the stomach, like, oh boy, do we really want to do this? Like, yeah.
That pit in your stomach is the founder. That is the pit that every founder feels. And you have to be able to be in a healthy relationship with that feeling in order to successfully raise a round.
All right. That's great closing advice. So if people want to learn more, it's just torch.io, right?
Torch.io. Follow me on Twitter, Yarbrough Cam, at Yarbrough Cam. And my company Twitter handle is at Torch Labs.
At Torch Labs. Excellent. Great. Anything you want to promote or plug, or just check them out and follow you?
Please check out our homepage, torch.io, and follow us on Twitter.
Excellent. Cameron, this is super good. Look, I've got just pages of notes. Awesome stuff. Thanks so much, and good luck with Torch, and we'll catch you after your Series B.
Thank you, Nathan. Have a great rest of your day.
All right. Bye. Thank you.